welcome. My name's Andrea Schmitz. I'm the president of SILC, and we are welcoming you to our SILC Masterclass today entitled Using Accounting Standards to Create a Sustainable Investment Profile for Capital Investing. So a few course notes before I turn it over to Michael. Our goal at SILC is to integrate sustainability into accounting standards, legal frameworks, and investment decision making. This particular course runs from noon to 1:30. However, we think we will probably be done closer to 1:15. This is the second of 4 courses. Those who attend all 4 courses will receive a SILC course completion certificate. We will make videos available soon for any courses that you may have missed, including course 1, which happened in January. We'll let you know when that's available. And also, today's attendees are eligible to receive New York State CPE credits. So be sure to answer the Zoom pop-up questions during the course so that you can get that credit. Also, feel free to put questions in the chat. We will do our best to answer them during the course. And with that, I'd like to introduce Michael Creighton, a true expert in the field. Michael is PhD, CPA, and founder and president of the management consultancy Save the Blue Frog, hence the blue frog you will see in the background. Dr. Creighton has more than 40 years of management consulting experience. He currently serves as the Director of Intellectual Content for SILC and as Technical Expert for Sustainability and Resilience at PKF O'Connor Davies. He recently completed a 2-year term as Director of Accounting Program Initiatives at the University of Houston, and in 2025, he received the Texas CPA Houston's Outstanding CPA of the Year Award. So I will turn it over to Michael. As I do so, I'm going to let you know he's going to share some documents. I have put in the chat how to get these documents. I would encourage you to save the link and the instructions, but do that after the course. And you can. So with that, I'm very pleased to, again, thank you all for joining and turn it over to Dr. Creighton.
Thank you so much. Good afternoon, everyone. Welcome, Andrea. I have to confess that whenever someone refers to me as an expert in this field, the field's changing so rapidly. I mean, often by the day that I strongly suspect there are no experts because we're just learning and making it up as we go along to a certain extent. So I say that for a reason. If you find yourself at any point, either during this session or at any other time, just feeling that you're not sure about something, you're always welcome to ask. If it happens during this session, of course, put it into the chat and I'll do my best to answer it, time permitting. Otherwise, if you allow me to share screen. Okay, you should see my entire screen at this point, including on the left a website. This is where the link that Andrea mentioned is posted in the chat box takes you to. If you just remember my name, Michael Creighton, and go to michaelcreighton.com, it forwards to this site. And if you click on presentation files, I post all of my presentation materials there. If you click on the SILC link, you will see all of the documents that I will review with you today, actually in sequence. Quick comment about that, though. Some of these documents are voluminous PDF files with a lot of dense text and a lot of very deep, colorful images. So each document can take a while to download. The folder itself can take a long, long time to download. So please keep that in mind if you find yourself needing to be patient as the thing downloads. Having said that, oh, and I should also add, if you wish to ask me a question directly about the subject matter after the session, you can come right here, click on Contact Me, and this Contact Us or Contact Me box or function turns every text message here into a personal email message. So a question typed in here comes directly to my inbox. Okay, so with that in mind, let me shut this down. Let me go to my first slide. Now, there's much of what you will see here in these materials that I will not be able to cover in their entirety. Time just doesn't allow me to do so. But I think it should be worthwhile for us to begin with just a quick conversation about why capital investment profiles are necessary. Clearly, you are persuaded that they are, or else you would not be joining us here today. But in terms of why they're necessary, capital investment profiles are required to deal with a problem that many investors believe is not solvable within the field of sustainability or ESG investments. It's the apples versus oranges problem regarding accounting standards. Now, unlike financial accounting standards, where if you have two very different companies, they may have different types of operations, but they still issue an income statement, a balance sheet, a cash flow statement. They have the same types of assets and liabilities and revenues and expenses. And therefore, to a certain extent, you can compare financially apples to apples if you're looking at two very different company financial statements. Many people say you cannot do that with sustainability accounting statements because there isn't just one single set of generally accepted accounting standards. There are many different standards. And furthermore, selecting which metric to publish or which set of standards in part or in whole to follow varies from company to company. And as a result, because of this selective ability to decide which standard or standards you wish to follow, combined with the fact that there are many, many, many such standards, people say even two companies in the same industry or two ESG investment funds in the same industry might be vying for my attention as investment targets. Many people say I can't use publicly available accounting metrics because I'd be comparing apples to oranges. Well, the bad news is that's a perfectly legitimate complaint. Looking at two different ESG reports of two different organizations is, metaphorically speaking, comparing apples to oranges. But the thing to keep in mind is that you are not comparing the apple to the orange directly. You can't do that. Rather, and please bear with me as I walk through to the end of this fruit metaphor. Rather, what you need to do up front is to create a profile of the fruit that you would want to invest in. And then you would compare the apple investment opportunity to your profile of an ideal fruit. You would then compare the orange investment opportunity to your investment profile of the potential ideal fruit. And the apple versus the orange, whichever one is closer to your ideal fruit profile is your preferred investment opportunity. It's not apples to oranges. It's apples to fruit profile, oranges to fruit profile. Which of the two is more direct, is more comparable? That's the way that you engage in this investment decision-making process. Now, if that makes sense to you, then as a result, something else that would seem to be a problem actually becomes a good thing, a help. Because if you say, okay, apples to oranges is something that I've always thought to be a problem, and therefore, the more different the apples are from the oranges, the less I am able to compare them. Well, that's old thinking. Here, if you're comparing each individual fruit, apple and orange, to the profile for fruit overall, then the more the apple differs from the orange, the easier it is to rank them in terms of attractiveness, and the more useful this profile is. So the very differences between your apples and your oranges, which people often complain about in terms of, as they say, making it difficult to use sustainability metrics, actually becomes a good thing, something that's very helpful, as long as you're creating your fruit profile. Now, obviously, that's a very simple metaphor, but for those of you who are familiar with, and I have to apologize, the attendance questions pop up on my screen as well. So you will occasionally see me pause for a moment as you are pausing for a moment to answer those questions. Um, in any event, to get back to the issue at hand, the investment profile process is one that investors of capital need to use to decide on the ideal investment opportunity. By the same token, anyone who needs investment capital, which includes all companies, nonprofits, governmental entities, they all need to engage in this process as well. Even a recent college graduate with $500 in his or her pocket who is opening up their initial account with an investment fund and wants to make their initial investment of their lives in a sustainable company should ideally go through this kind of process. Okay, I hope that makes logical common sense to you. To get back to my point before I pause to answer the attendance question, it seems very simplistic. But if any of you are accustomed to a data analytics approach to this kind of question, what I'm really talking about is creating a baseline scenario that comes up with a baseline valuation against which you have alternative scenarios and alternative valuations. Okay, I'll stop talking about data analytics at this point, since that is not a prerequisite for this particular session. I thought it would be most efficient not to launch into an initial theoretical set of slides about how conceptually to build these profiles. Instead, I thought you might find it helpful, given our limited time and your natural desire to be as pragmatic as possible, to show you the data that currently exists across many different organizations and that is available for free on the internet. I tried my best to think of 3 different organizations that are in very different sectors of the economy. And the sectors that I chose were hotels, a service, automobiles, a product, and food and beverage, which is technically a product, but is often delivered along with meals, which meal delivery is a service. And what I wish to do with you at this point is to walk through a set of information for a sample hotel organization, a sample automobile manufacturer, and a sample food and beverage company to show you the metrics that they make available for individuals who are preparing investment profiles. The point of doing it this way, hopefully, is to demonstrate to you that even very, very different organizations approach this task in very similar ways. and that therefore it would behoove you to approach this task in a similar way as well. Okay, let's start with hotels. Now, I did not want to go with a huge hotel chain like a Hilton or a Marriott because they are somewhat unique in the hotel industry. I also did not want to go with a tiny boutique hotel chain because they are also somewhat unique. They look for niches in the industry. So I went for something in the middle and I decided to select Wyndham Hotels. Fairly sizable hotel chain, but certainly not at the size of a Marriott or a Hilton, at least not in the business hotel space. When you ask yourself, okay, there's a company out there whose data I wish to access for profile development purposes. How do I find the data? And how can I decide whether or not the data is very valuable or not so much? Well, the first thing that you want to do is just go to the organization's website and see how easy or how difficult it is to find their sustainability section, if it even exists. At Wyndham, the sustainability ESG menu item is on their homepage, easy to find. Next, when you first access the organization's sustainability section of its website, you will probably see an awful lot of beautiful pictures, impressive sounding text, and maybe even some numbers. Ignore them, at least on your first go around, because what you want to see is something that looks as much as possible as an annual financial report, except it will be the annual sustainability report. There should be a new one that comes out every year. It should be saved in simple PDF format because usually that's what Form 10Ks and other annual reports are saved in. Simple PDF format. If you find that, go directly to the table of contents. You can look at most of the pages and probably see more pretty pictures, dense text, and some numbers. But the industry practice is to put the tables full of metrics and other informational language into an appendix at the end of the annual report. So go right to the end. Is there an appendix? Yes, there is. Well, how do you assess whether or not the appendix actually has helpful data? If the company is simply presenting data that looks impressive, but that has not been codified in accordance with industry standards, then that's not so good. But if the data has been codified and is being presented in accordance with industry standards, that is good. Now, you might say, but Mike, you just said that there isn't a single promulgator of sustainability accounting standards out there, which creates the apples to oranges problem. Yes, that's correct. But unlike 10 years ago or even 5 years ago, the industry is consolidating its attention into a bucket with perhaps 3 or 4 major standard setters. The GRI is one, and as you can see, Wyndham uses them. The SASB is two. Now you'll see references to the TCFD. Technically, they no longer exist. They've been subsumed, sort of acquired by the IFRS Foundation. And the IFRS Foundation is now publishing, building upon the TCFD, standards known as S1 and S2, the first two sustainability standards. So sometimes you'll still see references to TCFD, but other times you'll see IFRS S1, S2. These are the major standards. Are there any other standards? There is one other set of standards that you'll see quite often, but it's a little quirky, it's a little different. And as a result, you'll often see them in these reports, but not necessarily in the appendices along with these more traditional standards. I believe if you go to, and here comes that attendance question again. Yes, page 10 of this report, you'll see it. Wyndham does not even bother to mention that these little numbered boxes are actually representative images of a slightly unusual, but still very popular set of standards promulgated by the United Nations called the SDGs. Now, if you're trying to write all this down, GRI, SASB, S1, S2, SDGs, you don't need to do it because I will, in a few minutes, go into them in much more detail. But I do want to show you that even for an organization like Wyndham, which is certainly very respectable, but is not a giant in the hotel industry, they publish an annual report for sustainability in traditional PDF format. And they seem to use all of the most commonly used standards, GRI, SASB, the new IFRS S1, S2, they're all in the appendices where they should be. And they even have some reference to the unusual set of standards, the UN SDGs. What else is there to talk about? Well, there is one other thing. Companies are publishing these standards. Are there auditors who audit the numbers the way that auditors audit annual financial statements? And the answer is, of course, there are. But remember, this entire system is voluntary. So organizations that publish audited sustainability reports do have such reports. But other companies do not choose to hire auditors because they do not have to. Is that good or bad? Well, you might say it's bad, but by allowing companies to choose, companies identify whether or not they believe that external auditors are important. If in your investment profile, you think it's very important for companies to get their numbers audited in the field of sustainability, you might appreciate the fact that this activity is only optional because it helps you identify the companies that clearly agree with you. Wyndham agrees with you. Wyndham has an assurance statement. Now, being a CPA, and I know that only some of you are CPAs in this session right now, but being a CPA, I happen to feel that a public accounting firm that performs audit or assurance procedures on these numbers in accordance with the standards of the AICPA, the CPA Industry Trade Association. I happen to believe that is the gold standard of assurance statements. Wyndham has chosen another approach. They clearly did not use a CPA firm. They used a firm that is fairly well known called the LRQA. And for those of you who have not heard of them, I'll explain who they are in a moment. However, the LRQA does use the international accounting standards for auditing, which are the ISAE standards mentioned in the first paragraph of this report. In addition, they use some ISO standards, which are very well respected private corporate standards. And so what you have here is not what I would consider to be a gold standard uh, audit or assurance report, but it's really not bad at all. Now, in terms of who LRQA is, LR stands for Lloyd's Registry. It was a company that began its existence in Great Britain at the same time that Lloyd's of London, the insurance company, was issuing property insurance contracts for all of the British merchant ships that were going around the world pulling in raw materials to the British Empire factories back in Great Britain. So you had all those wooden ships going around the world pulling in spices back to the British people. Lloyd's Insurance, Lloyd's of London, insured that property. Lloyd's Registry was the ship registry that registered the ships. Well, the L and the R in this company's name still exists. They went into the quality assurance business. I believe they are now owned by a unit or an affiliate of Goldman Sachs, which undoubtedly has other investors that have invested in LRQA. My point is that they are not a public accounting firm, but they are owned by some fairly sophisticated players in this space, and they do have an illustrious history. And that's what you get out of an annual report of Wyndham's. Now, in terms of what the tables filled with metrics look like, sometimes they are literally tables filled with numbers. In Wyndham's case, they give these tables with links, and the links take you elsewhere in the report or elsewhere on Wyndham's website where you can find tables filled with numbers. Be that as it may, the numbers are all here. Now, second up, if you will. Tesla, the automobile company. I thought Tesla would be interesting because clearly, as an electric car company, they have an interest in publishing sustainability metrics. However, as we all know, the owner, the founder of Tesla, has his own unique political preferences. So I was curious to see what I would find in terms of Tesla. Sure enough, they follow the same type of approach everyone else does. Number one, when you go to their website, doesn't take much time to find the sustainability accounting metrics section. Number two, they do publish an annual sustainability report in PDF format. Takes a moment or two to look at the lower right-hand corner of the homepage or cover page to see this is the 2024 report. Number three, in their table of contents, you need to look for the appendix to see where the actual valuable quantitative information for capital profiling happens to be located. Number four, what they seem to do here is if you look at appendix, Tesla does not use the GRI. They don't find it helpful. If you agree with them, it doesn't bother you. If you disagree with them, if you find the GRI helpful, that is a problem. But as you can see, they do use the SASB standards to report metrics. They use the TCFD, now known as IFRS S1, S2, And look, they also use the UN SDGs. Furthermore, they do have an audit opinion, or I should say, an assurance procedures opinion. They call it management assertion, and they go all out. Their annual report, their auditors, if you will, are the ones who sign this. It's PwC, clearly a very well-respected Big Four accounting firm that produces this report in accordance with AICPA standards. So you might be upset that they do not use GRI standards to produce GRI metrics. But on the other hand, you might like the fact that they produce this type of auditor's report. Okay, in the interests of time, let me bounce over and look at McCormick. They are a food and beverage company in particular. They produce spices. Once again, it is easy to find their sustainability section of their website from their homepage. It also is not very difficult to find the annual CSR report, although they give it a somewhat unique name. Their sustainability report is called the Purpose-Led Performance Progress Report. Okay, so be it. You still go to this report. You click on ESG disclosures or appendix information at the back of the report. And what they do is they don't provide the tables filled with information at the back of the report, but they give you links to click on that take you to those pages. Which sets of standards do they use? Well, as you can see on the right-hand side of your screen, it's the same ones. The GRI, the SASB, what was called the TCFD, which is now IFRS S1 and S2. And actually, if you go to the previous sheet, they go all out using the UN SDG metrics. If you look at the third column from the left, UN SDG alignment. And so, and by the way, this is one of the key thoughts that I want to leave with you. Companies as disparate, as different as Tesla and McCormick Spices and Wyndham tend to use GRI, SASB, S1, S2, UN SDGs. The only exception is Tesla does not use the GRI, which is their right because this is an optional system. In addition, there is an independence assurance reporting process. Do they use a large accounting firm operating in accordance with AICPA standards? No. Do they use a very well-known firm owned by a huge global bank that goes back several hundred years, like LRQA, which uses international accounting standards? No. They use a company that employs auditing standards that are promulgated by an entity called accountability. Now, if you go to accountability.org and see who these guys are, it seems like it's a perfectly reputable firm that might do perfectly high quality standards promulgation, but they also do consulting work. And therefore they have, some might say, an inherent conflict of interest. The SASB itself does not do consulting work. The FASB, which issues financial accounting standards, does not do consulting work. Accountability does. Furthermore, if you look at the entity that McCormick uses to employ accountability assurance standards to produce this assurance report, it's a group called ISOS Group, which, as you can see, is a division of a consulting firm called Environ. It looks like a perfectly acceptable, reasonable group. It is not PwC. It is not the LRQA. If that matters to you, then you should note that accordingly in your profile. If it doesn't matter, then it doesn't matter. But as you can see, in certain ways, we are comparing these very different organizations on an apples to apples basis because by and large, they're using the same standard setters. And to the extent that they are using very different types of independent assurance firms that are using different assurance standards to do their work, if that is important to you, then you have an important differentiating factor to focus on. Okay, so those are the numbers. What I want to do with my remaining time with you is, for those of you who may not be familiar with them, show you what the GRI, the SASB, the UN SDGs, IFRS, S1, S2, what they look like, how you actually read them and how you use them. Because as you can see, they do serve as the basis of these reports. And then finally, I also want to answer the question, okay, Mike, I see where these numbers are coming from. How do I decide which numbers are most important to me and which numbers out of these categories should be included in my profile? Okay. First up, when asking yourself, which of these standard setters should I begin with? Most people agree with me. Begin with the GRI. Why? Because the GRI is not industry specific. The GRI is universal. In theory, if you are opening up a lemonade stand, if you're a 6-year-old and you're opening up a lemonade stand on your parents' front lawn, or if you're ExxonMobil, biodiversity might be something you might be concerned about. And therefore, regardless of how large, how small, which industry, which products and services you are engaged in, the GRI says you might be interested in, just to give you an example, biodiversity. Here are the standards for you. In addition, these GRI standards, they're not very lengthy. They are manageable. This one only runs 14 pages, and many of these pages are boilerplate. In reality, there are only 4 pages of these 14 that are really important. Beginning on page 7, we see the first of 4 disclosure elements that are related to the concern of biodiversity. This first element basically asks the question, well, how concerned should you be about biodiversity based on where you are doing business and how many species that we are concerned about live there? The second of four issues related to biodiversity reporting is, okay, now that we know how much space you take up that represents a potential concern, what do you do on that space? What is the impact of you operating in that space? Disclosure three of four. We know how much space you take up that is a concern. We know what you do in that space that could cause a problem. Issue number three, when your operations cause problems related to biodiversity, what do you do about it? Do you take action to further protect these species? Or if you do lasting damage, do you take action to restore the original condition of what you have damaged? And sadly, I don't have time today to go through the details with you, but I hope that you're glancing through some of these details in the bold-faced information on your screen to get a sense of what we're talking about. And then finally, issue four. The first three issues, right? How much business are you doing that is a potential concern? Are you doing any damage within those areas of business? And how are you reacting to the damage that you do? That basically summarizes this set of disclosures as defined by the GRI. But the GRI knows that you might also be using other standards that refer to classifications in this organization's so-called red list, which is a list of species people are concerned about. And so disclosure four simply says, hey, there is this extra global standard of species we all need to be concerned about. It's called the red list. Just disclose how many species exist on lands that you own and operate, because if it's on the red list, other standard setters might be concerned about it too. As you can see, these disclosure standards basically apply to all industry sectors and all companies that care about biodiversity. Now, you might wonder, but aren't there some biodiversity metrics and standards that are industry specific? If they're not in the GRI, where can I find industry specific biodiversity standards? That is what the SASB is for. The SASB is industry specific. And thus, if you want to invest in an oil or gas production facility, after utilizing the GRI standards to come up with certain general metrics for your investment profile, you look at the SASB standards. And sure enough, as you can see, biodiversity is a concern within the SASB standards. But the SASB standards will give additional industry-specific metrics that in this case only apply to oil and gas companies. For instance, how many oil spills or gas spills have you had, both in terms of number and aggregate volume? And when you have spilled, how much of that toxic product have you recovered, scooped back from the environment? You're not going to find a metric like this in the GRI standards because it's industry specific. You must go to the SASB standards to find it. Okay. What about these UN SDG standards, and why did I refer to them earlier as being somewhat unusual? Well, first of all, they're promulgated by the United Nations, and they're organized in 17 categories, known as the Sustainable or Sustainability Development Goals, SDGs. The thing that makes them different is the metrics are defined from the public's point of view as opposed to the company's point of view. And so if you're looking for biodiversity metric definitions here, what you would do is go to SDG 15, which talks about ecosystems, and biodiversity loss. And you'll see the overlap. Look at 15.5.1 in the middle of your screen. Oh, there's that red list information again. Yes, there's definite overlap. But the metrics here basically define what the general public and their government representatives find most important, which certainly overlaps the corporate perspective, but it's not exactly the same. As long as you're regulated by government in some way, or you're concerned about government, or you're concerned about your impact on society, you not only need to use the GRI and the SASB because you are an organization, you need to use the UN SDGs as well. Finally, what about what used to be known as the TCFD, which has been subsumed into the IFRS Foundation and is now known as S1 and S2? What do they look like? Well, to save a little time, let me show you what S1 looks like. It looks quite similar to S2. You might be wondering, why does Tesla use SASB but not the GRI? Are they allowed to do that? Well, I hope what you are getting out of my time today, amongst other information, is even if Tesla chooses not to publish GRI metrics, they are certainly aware of them. They know what they are, and those metrics may be used internally because they are a natural foundation for industry-specific SASB metrics. But is there any entity out there that says what we should do? And the answer is yes. For instance, IFRS S1 states on page 16, right here. Look at the last paragraph. An entity shall consider the SASB standards. They may not choose to use the SASB standards, but they must or shall at least consider the SASB standards. Where does this measure or mention the GRI? Well, if you go down to page 37, center of your screen, C2, an entity may use the GRI standards, not must, but may. Well, why do these IFRS standards say you must at least consider industry-specific standards? And you could consider GRI more foundational or global standards as well, but you must use SASB standards. A cynic or a skeptic might say the IFRS owns SASB, they don't own GRI, and so they're requiring the consideration of standards that they own. It's one way to look at it. It's a little cynical, but it's possible to interpret it that way. Another way to interpret it is by requiring companies to at least consider the more sophisticated set of standards. It's almost impossible to get to that point without considering the more universal foundational standards. So to get to the SASB standards, you really need to go through the GRI standards anyway. In any event, these are the kinds of guidance items that one would find in IFRS S1 and S2. And I see we have another attendance question, so let me take care of that. Okay, deep breath. Time-wise, we are going until 15 past the hour, so we have about 20 minutes to go. What have we covered so far? Well, we've discussed why the development of profiles is important for investment purposes. It's to address the apples to oranges comparison problem. We've looked at a set of very different, extremely different organizations, and we've noticed they actually use the same standards: GRI, SASB, IFRS S1, S2, UN SDGs. Are there others out there? Sure. Are they used? Sometimes. But even companies that use these alternative standards use them to round out or flesh out a profile. They primarily rely on the big three, the big three or the big four standard setters. The last question for us to address is, okay, Mike, I think I see where you're going. I need to come up with a capital investment profile so that I know how to review different investment opportunities based on what I want to see. And then as each opportunity comes up, I don't compare them to each other. I compare each one to what I want to see, my profile, my preference, and whichever is closer to my preference is the higher priority from an investment perspective. I get that. I also see that seemingly many, if not most companies out there tend to decide what to measure and what to report using a small number of global standard setters. And I see how to get to that data in these annual reports. Furthermore, I see that assurance activities by professional auditing firms of some type is actually at this point very common. But there is a wide variety of who is doing the auditing and which standards they use, based on whether or not you think that is important. It would be reflected in your profile. And if you think it's important, whichever organizations meet your expectations would become preferable as investment opportunities. That still leaves one final question. Do I just begin with page 1 of the GRI and read through it in its entirety, and then proceed to all of the other standards and just jot down which metrics I think are important. No. What you wish to do is look at the subjects that you believe are important based on the company's business plan. If you're considering a company or a project or an expansion of a product or service, if you're considering it to begin with, hopefully there is some type of business plan that exists. And so if you read the plan and it looks good to you, and you fundamentally agree with it, then whatever is noted in the plan that you value becomes the subject of a performance metric that should be included in your capital profile. If you are considering an investment in a particular company, and if the company has a strategy that absolutely emphasizes biodiversity, then the biodiversity standards are ones that you want to emphasize in your profile. On the other hand, if you're thinking about buying into a company, investing in a company, that doesn't make any mention at all of biodiversity as an important feature of their strategic plan, then you do not use those metrics. Okay, then the question, what do these profiles look like, is really the same as the question, what is your business plan? What does it look like? And from an accounting perspective, what does the list of key performance indicators or KPIs look like? Now, if you're an old timer and you say, Mike, I started doing this in the early 1990s when the concept of the balanced scorecard first came out, and I've never changed. Well, God bless you. I love old timers. This is very retro. But if that's how you feel, then your capital investment profile has basically 4 sections, 4 sets of metrics. There's a learning and growth section. Do I have good employees who are constantly learning and growing? There is a business process section. Well, do those employees who constantly learn and grow do their jobs well? There's a customer metrics section. I have good employees that do their jobs well. My customers should be thrilled. And then finally, there's a financial section. If all those things happen, I should be making profits. Am I? If you're a believer in the balanced scorecard, and if your entire business plan is organized in that sense, then your investment profile has 4 lists filled with KPI indicators as defined by GRI, SASB, etc. More people, though, say, no, Mike, my business plan is just a little bit more complicated than that. I have a strategic plan within the business plan. And so I have strategic metrics. I have an operating plan in my business plan. And so I have operating metrics. And then I have a financial plan in my business plan, which for capital investment purposes really focuses on which resources I feel I must invest in to get an appropriate return out of that investment in order to succeed in business. Okay, so if your business plan has a strategic planning component, an operating planning component, and a financial planning component, then instead of 4 lists of metrics in your capital investment profile, you have 3. Where do you find some information about what to put in those 3 lists? Well, you can just look at your own business plan. I like to check what is called the 6 capitals model, which I'm sure is familiar to at least some of you. Why? Well, the operating plan is actually shown in the middle of this model. Your operating plan talks about how you take inputs, you perform processes or activities out of them or on them, and you produce outputs for sale. Your strategic elements of your business plan are actually listed on this outer circle. Your strategic plan certainly begins with a purpose, a mission, and a vision, which appear at the top of the circle. And you might have in your strategic plan something called a SWOT analysis: strengths, weaknesses, opportunities, and threats, which are summarized here as risks and opportunities. Okay, so where do I see here on this picture the fact that my financial plan might involve investing in activities that preserve threatened species, which is the essence of biodiversity? Well, the different resources that you might invest capital in are listed on the far left and repeated on the far right. If you are investing in activities to protect biodiversity, those would be investments in natural resources. That's the natural box, if you will, or oval in the lower left-hand corner. Can you add additional assets or resources here that aren't quite listed here, but that are important to you? Sure. It's your business plan. Therefore, it's your capital investment profile. This is just a guide, but I find it to be a helpful one. Okay, we have now reached, with 10 minutes to go, my final PDF document, so we are right on time. How about that? Final document. I have said to you, hopefully often enough to just be a tiny bit annoying, but not so often that I can't repeat it one final time. There is today, unlike a few years ago, a coalescing of metrics for capital investment profiling purposes in a small number of standard setting bodies: GRI, SASB, UNSDGs, the integrated reporting framework, which we just looked at, it's the 6 capitals model, etc. The ones that I showed you are basically the ones that we are now focused on. However, every once in a while, an organization says, there's another set of standards that I happen to find helpful that aren't in the regular standards. Can I use them? My answer is yes, you can, but you need to be ready to justify their use, and you can't have too many of them. To show you an example of this, as you see, and this is just one example for illustrative purposes, but it's a very well-known one. Back in 2020, at the World Economic Forum, the organizers of the forum, I was very impressed by this, actually found a way to get all four of the big four accounting firms together on one page to collaborate on this one project. And what they tried to do was say, if my sustainability business plan is based on these four pillars or four sections, governance, that's the G in ESG, planet or the environment, which is the E in ESG, people, and prosperity, which is really the S in ESG, social. Now, you might say, how is prosperity social? Well, if you look at these social standards, they're really socioeconomic. And so the economic piece of socioeconomic is in the S of ESG. If your business plan happens to be focused on these four pillars, then you want a list of metrics primarily pulled from the most commonly used standards to measure your success in achieving your goals in each of these four areas. Well, in the interests of time, let's just look at the metrics for pillar one. Now, they stretch from page 49 here to 54. Because we don't have much time left, I'm just going to skim them. But if you look in the right column, we'll see primarily which standards they use. Well, here's the GRI. We know them. Here is a lot more GRI. And IR, those are basically the six capitals model, the integrated reporting model. We just talked about that too. Down here, more GRI. Yet more GRI. More GRI. And as we come down to the bottom, a little bit of SASB. So in this particular section, you see a primary reliance on GRI and a little bit of SASB. But remember, this is only one of four major sections of this document. And so the other metrics, the other standard setters, can be found in those other sections. Okay, you might say, but wait a minute. You might be wondering, hey, Mike, at the very beginning, at the top of this list of standards, before we got into all of the GRI and the one SASB, it began with a source that was called the British Academy and Colin Mayer. What is the British Academy? And who the heck is Colin Mayer? Well, Colin Mayer happens to be a professor. I believe he teaches at Oxford in the UK. And apparently, all four of the big four firms like what he writes about. They like his standards. And as an academic professor in Great Britain, he's a member of the British Academy, and he writes for them. And so, because the big four really like Professor Mayer's work as published in the British Academy, they included certain of those metrics that he wrote about in their profile, which is right here in this document. Please note, can you do that? Can you reach out to some seemingly esoteric source because you think it's better than anything you can find in the GRI, the SASB, etc.? Of course you can. It's your investment profile. It's your business plan. If you make the investment, it will be your company. As a result, you can include anything you wish that you think is best. On the other hand, as you can see, try your best not to get carried away because the world now understands that most individuals expect you to rely on the GRI, the SASB, etc. We have 2 minutes to go. I will stick around and answer all of the questions that you might have. But because I have concluded my material with 2 minutes to go, Andrea, if you are online, perhaps you can come back for final thoughts, and then you're welcome to either leave or remain for Q&A as you see fit. Thank you so much. And Andrea, back to you.
Thank you, Michael, for a fascinating course. I learned a great deal. I hope all of our attendees did today. I want to let you know we're going to be sending out a review form. We really appreciate your feedback, so be on the lookout for that and send us your thoughts. And with that, we are going to open it up for questions. For those who cannot stay, we thank you for attending. The primary portion of the course is over, and we will stay on for any questions. Feel free to put them in the chat or speak them to Michael and I directly.
Thank you
And
so
thanks again,
much.
everyone, for attending.
Thank you. And again, I'm still sticking around, but officially, we'll close the 75-minute CPE portion of our session. Best of luck to all of you.